Legends, what is going on? Hope everyone's well. Today, I just wanted to talk about the importance of market structure and our top-down analysis, okay? Because we can have everything going in our favor and trading with the trend and things like that, but we need to understand that the trend will always shift on the smaller time frames. So what we want to be looking for is confluence with a smaller time frame and the higher time frame, so then we can put the trade in our favor and have the best odds of winning that, okay? And this isn't a silver bullet. It doesn't say make it that you're always going to win the trade and things like that because the markets will do whatever they want to do. However, if we are thinking in probabilities and looking for a system that gives long-term results, then putting ourselves in the best position every single time is the thing that we can do, right? And we need to understand that putting ourselves in a position that is going to, have a high probability winning streak is exactly what we want to do, even though we may have those losses. So what we always want to be doing is looking at our higher time frame trend. Okay. So currently, right, we are in that uptrend. So what we want to be doing is going, all right, well, I want to be looking for longs. Yeah. But if we go down to a smaller time frame, say the 1 hour time frame, we've had that bullish market structure. But what we can see here is a very clear market structure change, right? We're coming up, we're still going up, we're still going up. And then what we've had is we've had this really harsh sell-off, right? And then we've called what we call a bear flag, right? Back into a resistance point. And now this signifies a market structure shift. Yeah. Doesn't mean we're bearish overall. It just means that we're having a bit of a pullback. So this is the importance of a higher time frame bias, but also analysis as well. So the top down analysis. Okay. We're always starting on our higher time frame daily, 4 hour, 1 hour to look for the best opportunities. So if I'm looking for longs, right, because my daily bias is long, but my 1 hour time frame is bearish, I'm not looking to take longs, okay? Because the momentum has shifted. So we either wait until market structure shifts, right? And then we've got bullish market structure again. And now that's confluence with our higher time frame bias, right? And then we know that we're on the right side of the trend. It's a higher probability of winning. Or we can understand that what are we trading into? Okay. So this is where we start to mark our area of values out in the higher time frame. Nothing's really clear here. So let's go down to a 4 hour time frame, right? We can see that right here is a level of support, and we've had a significant move from here. All right. So we can pretty much just zone this, and then we go, cool. What we want to be doing is waiting for price to tap into here, right? We want to see big wicks to the downside to show buyers are in this area. And then we want to see market structure change. So if we've got the sideways consolidation period here, which shows indecision in the market, but then we have a powerful breakout, like a really powerful move out of here that shows buyers have taken control, we know our higher time frame bias is long. Now the buyers are stepping back in at this area. So it's a higher probability that this is the lowest point in this pullback. So then we can start to look for those continuation patterns, break and retest, wicks to the bottom side, right? And then we can start to look for our longs into the next areas. So this is how we put the trade into a higher probability side of things. Because right now, like we could be going sideways and then we could just break back down, right? So we always want confluence on the 1 hour time frame or whatever the time frame you're trading on to your higher time frame bias, right? This will stop a lot of heartache. This will stop unnecessary losses. Yeah, we're always going to get losses, but we can mitigate and minimize our losses overall by just trading with the trend and also having our bias, our higher time frame bias, have confluence on the smaller time frame to, take those trades. Then the next idea is looking for that area of value, okay, to get a more precision entry. So we don't just take a trade in the wind. We don't just buy or sell wherever the hell we want, right? What we want to do is look for areas of value to take trades out of. So for example, all right, we're in this uptrend. Yep. Let's look for, let's just do like a replay. Start new. All right. See how we've got that break and retest here. Sideways, pushed out, broke, retested on here. This would be a nice area to take a trade from, right? Could have our stop loss down there and then target however we want. Usually a 3-to-1 risk to reward. But we wouldn't want to look and go, oh, let's just take a trade out of here, right? Because we don't know where to put our stop loss. We want to be taking a trade out of an area of value where buyers want to step in, right? Which would be here. So this is our highest probability. And this is just about refining our trade once we start getting the biases and the market structure right and stuff like that. So it's trend identification, and then we're looking for our areas of value, and then our precision entry, which is our candlesticks and our triggers, right? So now we've identified our area of value, and we've got our stop loss below structure, okay? And then we're just looking to take that trade up, and this would have been a nice trade, tapped in here and continued up. So this is why we like to trade with the trend, because if it's going to run, we're going to be hitting some big numbers, right? So for example, this trade here, if we took it and we're on a $200,000 prop firm account and we're risking 1%, so that's $2,000, right? This would be a 7 risk to reward. So 7 times 2 is $14,000. That one trade could have been a $14,000 trade. Okay. So this is the power of being on the right side of the trend, being in confluence with the higher time frame trend, and then taking trades out of areas of value where buyers or sellers want to step in to purchase and push the price up. Okay. So hopefully you guys learned a little bit about market structure, higher time frame biases, lower time frame biases, and areas of value. Now, if you want to learn a little bit more, we've got digital courses, we've got market scans, we've got live Q&As in our free channel. It's called the Traders Launchpad. Okay, it's on Skool. The link will be below here. So jump in, it's free. We'll give you digital courses, everything like that. You can ask questions, it'll build your foundations. And if you want a little bit more, we do have personalized programs as well. Okay, but right now, if you do want to learn the basics, it's all in there. You guys can go for gold. And yeah, see you in there.